Today we'll be diving into Ethereum, and we're going to look at this through Treasury companies. And today's going to be a good one because we'll have a special Treasury company on the show. You don't want to miss it. My name is Paul Barron. Welcome back in. Let's get started. I do want to thank our sponsor today, and that's Coinbase. This is where you guys can get going on your crypto journey. If you're brand new to crypto, a great place. Visit Coinbase.com. The future of money is here. And there's so many different tool sets that you can use, both as an individual and as a business. The key thing is just get started, go over and make your first trade. Use our link down below. It's going to give you up to $200 in crypto to get started. You guys can't go wrong. Let's get into a couple of points I want to hit on. And as everybody is tracking this, the amount of companies that are starting to move into strategic reserves, treasury companies, DATs, digital asset treasuries, is growing. And Ethereum, of course, is one of the biggest one out there. BitMine, you guys will all recognize some of these top few, and that is Tom Lee's number one right there, SharpLink Gaming. Of course, that's Joseph Lubin. And then you have the Ether Machine also coming in right there at number 3. So we thought, let's get them on the show and take a little bit of a closer look under the hood. And if you've never been over and learned a little bit about the Ether Machine, you can just go over to their website, just ethermachine.com. Learn a little bit more about what they're doing, both their team, their investors, and the strategy going forward. I wanted to bring on their co-founder today, which is Andrew Keys, who's the chairman at the Ether Machine. Great to have you, Andrew.
Thanks for having me, Paul.
Yeah, so let's get into the Ether Machine. First of all, great name. I mean, we have to go and give you your flowers on that one. You can't miss with this one. Tell us a little bit about what you guys are doing. What makes you guys different than what Tom Lee is out there spinning? All that good stuff.
Sure. So maybe by way of background, I could just give you 1 second on how I got to the Ether Machine. I helped Joe Lubin of SharpLink build a company called Consensus, which is the most well-known Ethereum ecosystem builder, created 3 of the implementations of Ethereum, and also built a commodity pool operator for institutional staking called DARMA, which is an acronym for Digital Asset Risk Management Advisors. And I got here a bit differently than I would say most of the treasury companies. One of the large institutional ETFs reached out to me about 6 months ago and asked me to be a market maker for them because the ETFs are going to enable staking soon. And if you follow the ETPs, so their equivalents in, let's say, Canada or Europe, they're staking at what I call 50% capacity. So if you have $1 billion in a European ETP that is holding Ether, they're only staking 500 million euros worth of that billion, and so they're only earning a yield on 50% of the assets.
Right.
And the reason why that's happening is due to a technical nuance within Ethereum called the withdrawal queue. And the withdrawal queue essentially means that if you were to unstake today, you would get your Ether back in, let's call it, a week. But if, God forbid, there was some type of black swan event that occurred and 50% of stakers or 70% of stakers want to unstake at the same time, that withdrawal queue would grow from a couple days to 6 months or even a year. So there's no way to really underwrite this issue. And the ETFs, the only thing that they can do is basically just stake less than full capacity. And we're already seeing this in Europe, and that's what's going to happen in the US. So I started thinking about, well, if we could create an operating company that could stake at full capacity, and the ETFs are only going to do what I call vanilla staking. They're not going to be able to do restaking or participate in DeFi. I believe that in the example where the ETFs are earning 3% yield on only half of their money, so a net 1.5%, we'd be able to earn that same yield on all of the capital, plus we'd be able to engage in DeFi and restaking. And then furthermore, we'd be able to employ some of the financial engineering that MicroStrategy pioneered, such as issuing convertible bonds or preferred shares, basically debt that's inflating to buy digital assets, where you're paying back cheaper dollars years from now, and you're essentially acquiring the underlying asset for shareholders that want exposure, in this case to Ethereum.
Right.
So basically, we set out to actually deploy capital in this space, and we came across kind of two paths, and one thing that I think is materially different from us, and let's call it the shell companies, is I was going to deploy a material amount of my own capital in this. So I've put 170,000 Ether personally into this vehicle. And when I started looking at this, there were basically two paths you could go. You could reverse take over a dying microcap.
Yep.
So your failing biotech company, your failing Bitcoin miner, pick your poison of some company that's not doing well, and or you could create a de novo entity, so a brand new entity that doesn't have a pre-existing operating business, pre-existing cap table, pre-existing governance issues, and basically, I started looking at this, and I had 3 calls with 3 different shell companies. One was a biotech where the CEO wanted to be paid $5 million a year to stay on the board, and he didn't know how to spell Ethereum.
Yeah.
Another one was a Bitcoin miner that was in year 4 of a 10-year lease of a data center, and it was $10 million a year, for the next 6 years.
Hence
and
failing
I basically,
companies.
these are failing companies with all these liabilities, and I was like, there's no way I want this for myself as one of the largest shareholders in the vehicle.
Yeah.
And I got very clear that doing a special purpose acquisition company, a SPAC, with a de novo merger of a clean LLC was the right way to go for institutional investors. And so where we've kind of differed off the bat is basically we've created a pristine entity that we find to be extremely important to institutional investors. And so the devil's avocation to that is we're going through what's called the S4 registration process. And S1 is the process for an IPO, and S4 is the process of a merger. And basically, that's going to take us 60 days with the SEC's blessing, approximately. And so basically, once that happens, we'll be kind of full steam ahead. And with that, I think a core difference is what brought MSTR from a single $1 billion vehicle to a $1 billion vehicle was not what's called at-the-money equity issuance, or ATM, which you may have heard of when discussing these treasury companies. What actually drove that was the usage of convertible bonds and preferred shares, which are credit instruments.
Exactly.
And basically, hedge funds that want volatility and want to acquire volatility. They're not necessarily interested in buying the common equity of these vehicles,
right.
but they'll essentially acquire a convertible bond. And the good news, versus Bitcoin, Ether has double the volatility of Bitcoin.
Yep.
And generates this yield. So basically, we can pay the coupon of a bond. And so furthermore, we're going to be uniquely positioned. If you've seen the other shell companies, none of them have actually done any of those convertible bond instruments or preferred share instruments because they are shell companies that have to clean up their books and all these messes. And so while we're doing very well, because basically in private, we've been able to raise nearly $2.5 billion, not being a public vehicle yet. So I think that alone is a testament. And basically, once we're out the gates of our S4 registration process, we're going to be uniquely positioned as the cleanest vehicle with a Big Four auditor to issue this convertible debt paper. And so basically, what we're optimizing for is kind of larger institutional scale using the debt instruments rather than what we think could be dilutive to shareholders rather than accretive to shareholders, which are the ATMs.
Yeah. Well, and it's unique because first, a lot of questions here on that, but I think it's unique because what we have seen on a lot of the companies that have gone with the process of acquiring these dead on the vine companies is that it's mostly more of a retail play versus what, I think your strategy is going to be considerably different. It's a cleaner product for institutions. Wall Street's going to recognize it better. That's going to be, kind of the upside for it. And even if you look at stuff that we just did a show on this topic with Peter Thiel and him looking at the value of what Ethereum is going to be doing more on a broader basis, you guys are in the right place at the right time. I'm looking at your corporate strategy here on X. Obviously, acquire ETH, capitalize on additional capital markets and opportunities, manage the ETH holdings, which you explained perfectly, which is very unique. I was not aware of this issue. Well, we've seen a little bit of nuance in the market about this slowdown on staking, and now I understand what you're talking about. But stake and restake, I think that's going to be a huge capacity to really compound what you guys are doing. So kudos to you. Is there anything in here that, in terms of the growth side on that ecosystem, let me kind of zoom in on that for you, that is going to really dial in for future for you?
Yes. So I think we've already hit the three on-chain yield generation. So our North Star is growing our Ether concentration per share. So if you had 1,000 shares of our company, let's call it for round numbers, that would equal 1 Ether. Our goal is a year from now, that should equal, 1.25, 1.5, 2 Ether, something larger. And so we're constantly trying to grow our Ether concentration per share. So on chain, we can do that with staking, restaking, and DeFi participation. Traditionally, we can issue convertible bonds and preferred shares. And then lastly, to your point about growth, we hired for our CEO a gentleman by the name of Dave Merrin, which was the person in charge of M&A at Consensus. And basically, what we have to think about are things that are Ether accretive, where we could basically acquire a firm that is generating Ether. So things like staking facilities, custodians, anything that we could think about as cash flow, positive Ether accretive positions. There are also treasury companies that are trading at a discount to NAV that we could potentially acquire, via a tender offer. So we're structuring this to be kind of the cleanest vehicle for institutional adoption.
All right, so you hit on a lot of good points there, and I think right now it's a huge race on these digital asset treasury companies to kind of get to that micro strategy level to where we're starting to see the adoption curve start to take place. And to the point that you're hitting on, it really kind of zones in on one area that I know you have expertise on, and that is the idea of pitching the concept of Ethereum for treasuries inside major corporations. We did a show on this very topic around Microsoft, looking at where they would potentially play into the ETH ecosystem and get exposure. Do you see companies like Microsoft and Amazon and others saying, hey, this is where we need to go right here? This would be a vehicle and being able to get direct exposure.
So I have a very soft spot in my heart, in particular, for Microsoft.
Okay, why is that?
I'll tell you a quick 1 minute detour. 2015 was the first year of Ethereum's inception, and I met with the team at Microsoft that was to become the blockchain team, because there wasn't a blockchain team yet. And basically, I pitched them to put the Java implementation onto Azure so that they could basically have a permission version of Ethereum. So every Fortune 500 could tokenize an asset and send it around to counterparties. And we created blockchain as a service on Azure. We put a 200-word article in the Wall Street Journal and basically gave birth to the concept, Consensus and Microsoft, to blockchain as a service. And that was the first time Ether crossed $1.
Beautiful, beautiful.
And
well, then this is a natural.
So this is a natural. So now to this question, and it was a slightly different question, was basically, Ether for corporate treasuries. And we're talking about, let's just not, we're bifurcating the ones that are just solely purposed
Right.
treasuries here. So, I mean, I think there are two considerations. One is as we actually see smart contract functionality come to life, and we've really kind of seen the first iteration of product market fit with stablecoins,
Mm-hmm.
we're going to require a micropayment of this commodity of Ether to adjudicate and compute smart contracts. So
Okay.
so basically, corporates are going to need the micropayment of this fuel, just like they
Mm-hmm.
need Azure credits or AWS
Yep.
credits.
Yep.
So that's going to be a small, I would say, a small bucket, just like a corporation is going to need gasoline in their cars to ship via goods. Now, secondarily, I think what we're seeing now is uh, Bitcoin has been the opening act, but there is room for hedges against the U.S. dollar with digital asset commodities, and and kind of how Bitcoin has been deemed kind of digital gold, Ether
Mm-hmm.
being deemed digital oil,
Yep.
and basically it's sitting on balance sheets as an inflationary hedge or potentially even speculative play.
Mm-hmm. Well, it's going to be intriguing because as we start to see major corporations, I think the key here is going to be staking component. You guys have kind of solved that with the 100% staking option, which is really different than what we're seeing in the other DATs. So that's a big one. I'm intrigued with the Microsoft connection here because again, we hit on this very topic and we were talking about maybe being a crypto strategy specifically to Xbox. We anticipate that's going to be another play. And Ethereum most likely could go into that, and I'll explain that in a second. But when you look at all of this kind of coming to the market all at once, stable coins, the digital asset treasury companies, regulatory framework, everything's lining up. Do you think we're going to see major companies like a Microsoft and others start to make their move into
100%.
these areas? 100%. Okay.
100%. And like to your Xbox like notion, what we've seen children, teenagers flock to
Mm-hmm.
is like the gamification of assets.
Yep.
And really like we see this with things like Roblox, but they're basically not keeping the value. If you basically pay the dollar for the sword and then you kind of lose the sword or you don't earn the dollar, but now you have these digital tokens that actually represent a dollar, and there is a secondary market for trading my sword for your sword and my shield for your shield, and there's actually true value that's ascribed to this, because basically it's been a one-way street
Yeah.
where we as the consumers buy the video game, but we don't get to kind of necessarily keep the assets that we earn within the
Right.
gaming contours.
Sure.
And as soon as the first movers start sharing that value with the consumers, and it blurs the line where the consumer actually could basically own the assets within their game, and they could appreciate in value. That's what's never happened, is like
Yep.
the asset actually appreciating in value. And I think as soon as that happens, kind of behavioral economics and game theory will kick in, that it's a one-way street. That once you own the assets and see them appreciate it, and then you have the ability to sell the assets, that's a one-way street. And I don't think there'll be any going back to the video games of yesteryear, where all we did
Yeah.
was pay for them and never owned the asset.
And I think we're in that phase right now. The game companies are starting to realize it. Now the framework, the highways are being built literally as we speak. So that in itself is big. Are you guys buying any L2 tokens?
We're not right now. So basically, what we've learned in our journey is that institutional investors are very interested in single play exposure.
Okay.
They want
All
a
right.
vehicle that is not diluted, with 5 different, digital assets like a basket. They
Yeah.
want specific exposure to Ethereum or specific exposure to Bitcoin, and like that's simpler for their investment committee. to allocate accordingly.
Yeah, for sure. Why not create your own L2? Then it would
So,
essentially play right into it.
so we could create our own L2. I mean, this is a, let's just call it operating stock company that uh, is solely purposed and maniacally focused on increasing Ether concentration per share.
Yeah.
We have other vehicles that are that would benefit from the usage of an L2, but not for this particular vehicle that is really kind of bearing the flag of Ether concentration per share.
I'm going to go back to a statement you made earlier, and that is, how you're going to grow. Some of that will be through acquiring, strategic ETH assets in general. If you look at the current landscape of digital asset treasury companies, some of which are trading below NAV, MNAV, would you be able to go in and look at a possible tender offer on some of these before
Absolutely.
you guys go live?
Yep.
Okay, so that's on the
well,
table.
not before we go live. I think that would happen after.
Okay.
There's this kind of finite point in time, which is this S4 registration process.
Mm-hmm.
Once we're through the S4 registration process, so basically we have $2.5 billion of committed capital, which is 500,000 Ether plus another around $370 million of cash, and currently the ETHM stock is just trading at the book value of the cash and trust, which is $200 million. Right? We will be issuing shares for that additional Ether accordingly, and once that happens, upon our S4 registration, this will be trading at a $2.5 billion market cap. And due to the fact that we believe that we're going to be able to have a multiple of yield generation over the ETFs, we're going to be able to issue convertible debt, which we believe is very important in terms of generating Ether concentration per share. We believe that both of those factors are necessary for commanding a multiple to NAV in perpetuity.
Right.
And we've seen probably lower lift, I would just call it lower lift efforts where, maybe there's liability in these shell companies that have been found out. Maybe they just don't know how to run Ether strategies properly. Maybe they have a basket approach where they're not commanding a premium multiple to NAV. And that would be where we could potentially issue tender offers.
Yeah, okay. I'm looking at Cathie Wood's recent move with BMNR. Here it was, 116 mil of Tom Lee's Ethereum Treasury play, BMNR. And, Cathie has been a very innovative investor in Wall Street. Why do you think she was, I won't say late to the game, maybe just she didn't have the vehicle, onto ETH? And do you think we'll see more investors kind of following her lead now?
Yeah, so what I would say is, I don't know if she's been late to the game. She did create an Ether ETF, and I would say, broadly speaking, the ETFs have not done as well as, let's call it, the Bitcoin ETFs. Yeah. And I think a big reason of it is because they haven't enabled staking. So she did do that. I think Tom has done a remarkable job of acquiring Ether. I wouldn't have deployed my capital or others' investors' capital in a shell company. I just don't think it's the right structure. And so I would say that she has chosen to do so. And, that's her prerogative. But what we've seen with respect to institutional investors is the investment committee cares about these types of contingent liabilities and skeletons in the closets of, I would just say, broader speaking, these dying shells.
Yeah, I think that's something that everybody's got to pay attention to, because it's gonna be a little bit of a battle, I think, on Wall Street as to which asset is the best to go with. So intriguing that you guys have gone that direction. In terms of if you think about what percent I'm just looking at the ETH reserve historical data right now. At what percent do you feel that we're going to be at before we would potentially see an ETH supply shock?
Well, I mean, I think we're already seeing it, right? I
Yeah.
mean, we've gone from 2,500, 3 months ago to
Hmm.
4,500, back
Yeah.
of the napkin. So that's nearly a 40% increase in the price, and I think we're going to continue to see this. I don't think we're going to see a slowing in acquisition, uh, because vehicles like mine are just getting started and are going
Yeah.
to be able to acquire via converts. I do think it'll be very interesting as you've seen the MNAVs that are primarily equity based ATM issuances
Hmm.
are starting. What I think we're seeing is a little bit of exhaustion. Is
Interesting.
that people
Okay.
are starting to think that um, the next additional ATM offering could be dilutive to shareholders rather than accretive,
Mm.
and basically that's why I believe we're starting to see some MNAV compressions.
When you look at, okay, so well, last question to you, and I'm looking at just what's going on in the ETH development ecosystem. You're very familiar with this. Fusaka,
Sure.
right now, Vitalik's talking about this maybe late this year. Are people sleeping on this right now? Because Fusaka will really change things around a bit. What are your
Yeah,
thoughts?
I think that Fusaka will happen this year. And I think that, broadly speaking, we've seen an expedition of the upgrades to the consensus layer and the
Hmm.
execution layer of Ethereum. And I don't necessarily know if any more, like the big one was the transition from proof of work to proof of stake, where
Right.
you were literally having, like, pick your metaphor, where you were having open heart surgery, and or you were changing the engine of the plane while it was flying. I think that these subsequent incremental upgrades are not as foundational, or you know, as something like the transition from proof of work to proof of stake, which really de-risked Ethereum. So I don't necessarily think that is going to be, let's call it, a catalyst for price rise. I think
Okay.
much more important to price rise is you saw Genius Act occurred, which was stable coins. And so
Yep.
80% of stable coins are settled to Ethereum layer
For
one.
sure. Yep.
So Ethereum was the largest beneficiary of Genius. And then furthermore, in November, you have Clarity, which is market structure. So equities, derivatives, bonds, all being tokenized. And,
Yep.
and basically, the largest beneficiary of that will also be Ethereum, because high quality liquid assets, there are about $250 billion of high quality liquid assets on blockchains. 90% of those are on Ethereum. So both of these tailwinds, I would just say, in the Genius Act and Clarity Act, are going to hugely benefit Ethereum at the application layer. And then the more applications that are built, the more gas that's used. It's kind of its own virtuous cycle.
Yeah. All right, so I have one just kind of a follow-up question here is the idea of tokenizing Ether machine itself. I mean, you're mentioning Clarity Act. Obviously,
Yep.
this will be the big
Yep.
unlock
Yeah, for
here.
sure.
So that's
Yep.
going to happen.
Yep. So absolutely, we are in conversations right now about tokenizing the equity. It will be on Ethereum,
Okay.
and that is something to stay tuned for. But undoubtedly, we will be tokenizing the shares. We are proponents of dog fooding our own assets,
I
and
like
we
it.
will do so.
Excellent. Good for you. Andrew, I mean, with all this good news, we're going to get Clarity Act. Obviously, we're going to see, I think, we have just seen the gates unlock for what we're going to see in stablecoins. That's going to just be a no-brainer. Multi-trillions coming in. What do you think Ethereum's price is going to be by this time next year? What's the, do you have a theory?
I easily think within 5 years, the price of Ether should eclipse the price of Bitcoin, the market cap.
Wow.
So first and foremost, the market cap of Bitcoin will be less than the market cap of Ethereum within 5 years. And I think that we easily have 20 to 100x in the price of Ether.
Interesting. All right. Well, listen.
What's the TAM of the internet?
Yeah, well, exactly. You can't put it on there. That is a very good point. And I think a lot of people sleep on that in the sense of where ETH is right now. For sure. So anyway, we are here with Andrew Keys coming in from the Ether Machine. Thanks again for coming in. We appreciate you dropping in.
Thank you, Paul.
You bet. All right, guys, if you're not in the Diamond Circle, well, you're going to get additional content from us. It's also where we drop the Baron Market Edge email, and that is my own analysis on what's happening in the market, all of our research, our compiled, even some of our analysis on our own data points that we look at the market on. So make sure and just join down below. It's free. Very easy to do. And follow me on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.